Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it Bull-oney. There's a lot of people talking about the fact they think this is a new bull market because it officially got 20% off the low on the S&P 500. Of course, there's been more than that over here on the NDX, NASDAQ 100. But this arbitrary type measurement, I'm calling baloney on, and I'll show you why in just a minute. But first of all, we're going to talk about the side-by-side view of the industrials, the S&P, and the NASDAQ 100. And then we're going to look at the Dow Industrials today, take a look at the Russell 2000 ETF, IWM, and then a couple of stocks that I'm looking at that look interesting, Chevron and Schlumberger. Okay, the Dow was, for this last week, the Dow was up 114 points on the Dow Industrials. So we continue to push a little bit higher here the last couple of weeks. Watching this pretty closely, I'll talk about my primary count on the Elliott Wave picture and my alternate count. The S&P 500, the same thing. Now this is actually pushed for 4 weeks in a row. It was up 16.549, 16 and a half points. And the NASDAQ 100 was actually down this last week, although it was just a slight little doji type candle after a pretty dramatic run that it's had, but it was down 18 points. Now, people are talking about the fact that we're quote unquote in a new bull market, etc. And I know a lot of people have been talking and posting things and saying that, well, we're never going to see the lows again that we saw in October. Well, we'll see about that. And let's just talk about some examples that we've had from the past. Here's some charts courtesy of John Hussman. And here's a picture of the S&P 500 from 2000 to 2002. Okay, look at the rallies off the lows that occurred. 1, 2, I'm counting 3, maybe the fourth one. Not sure if you can really count that because I don't think we then came down and took out that low again. But to October of 2002, that was pretty much it. But nice rallies. I mean, look at these rallies. All three greater than 20%. Then let's take a look at the NDX in that same time period. Look at this move, 43%. Well, that's interesting. What we just had was 40.5%. 43% back in early to mid June of 2000, actually, where we peaked. Looks like maybe around July or so, kind of thing. But then here's another one, up 23%, up 32.8%, up 53%, up 59%. And we just kept pushing lower, up 22.9% for the final move. 1, 2, 3, 4, 5, 6. Don't tell me that 20% off the low means you're in a new bull market, okay? And then the last one I'll show you, which is one that I'm sure you're all well aware of, the 1929 to 1932, plus 48%, plus 23, plus 27, plus 35, plus 24.6. There's 5 of them right there over a, 2.5 year period. And a relentless move to the downside. So yeah, once you get in a very severe cyclical, I wouldn't even call it cyclical, more secular bear market, it can just push and push and push. So that's where we're sitting. I do not believe by any means that just because we've had this kind of a rally or this kind of rally that we're in a new bull market. Okay, so let's take a look at the Dow Industrials. Let me make sure I'm not missing something that I wanted to talk about. Now let's go over here to the home screen and take a look at the Dow. So let's see. On Friday, we were up 43 points and again, up 114 for the week. So here's the picture. Here's my primary count that I've got. This hasn't really changed. Okay, so I think we had an expanding leading diagonal down for intermediate wave 1. Intermediate wave 2, pretty sharp move here that on a daily basis, the peak was on December 13th, intraday high, December 13th. Since December 13th, we have not been able to take out that high. Now, we've been chopping sideways. So it's kind of interesting to see, okay, where are we going with this and what's happening? This last couple of weeks, this move right in here is a little 5-wave move. So that's either one of two things. So I think the first, if you stay with this wave count, it says we're working our way down, okay? This could be a flat. This could be an A. Well, I mean, first you get the wave 1, then you get A, and then B, and then a 5-wave C, okay? So that's where 5 waves could be playing out. The alternate count is this. The alternate count says that instead of a expanding diagonal on the leading diagonal, that we had a contracting leading diagonal that ended here at the June low, and that we had, what we've got is a 3-wave move that ended in October right here for a wave A. So a 3-wave move down, and that we are in the process of a 3-wave move back up for a bigger flat, okay? Because again, from an Elliott wave perspective, a flat, as opposed to a zigzag is a 5, 3, 5. A flat is a 3, 3, and then a 5, okay? So what we could be doing as an alternate count is that we could be in the process of putting in a 3-wave move up here to the upside here that may take us all the way back up to the high, close to the high. But I'm not willing to go to that and move to that scenario yet unless we continue pushing higher, which will kind of distort the 5-wave move here. If we take out the May 1 high, and then take out that December 13th high, okay? So we do that, we take out the May 1 high, take out the December 13th high, then I'll be defaulting to this alternate count, okay? But until that happens, I'm staying with the primary count that we've had for quite a while that says we're working our way down. Don't worry about these, they're all linked together. It's just the direction we're heading in, and we'll get them straightened out in the right place as we start moving our way to the downside. Okay, so but that is the picture. This is what we're looking at. All right, so that's the Dow, and that is the picture from a primary to an alternate scenario. And you know, when you talk about a 3, 3, and a 5 as an alternate, this is what we had over here for, you know, from 2018 into the COVID-19 crash. We had a 3, 3, and a 5-wave move down. And you could see how vicious and strong that those C waves can be, okay? And the move from 2007 to March of 2009 was a C wave also of a much, much larger flat. And it was a pretty strong move. So yeah, if we kind of push up to something like that, we still have a pretty strong move that would be in the works. But again, 1 wave count at a time. We just want to see what develops in here and see whether we can continue to roll over, or are we going to take out some key highs in here on the Dow Industrials. Okay, let's take a look at the Russell 2000. Okay, the Russell 2000 IWM down 1.51 on Friday, but up 3.01 for the week. Pretty strong week that we had here, and actually it was the tail end of the previous week, that Friday, June 2nd, and then a continuation in here, especially on Tuesday and Wednesday. And boy, the frenzy just picked up. And I say that because, let me see if I can find the, where is it? I don't have, let me pull that up. Okay, here's what I'm looking for. This was an interesting chart that Jesse Felder shared on the IWM call option volume that occurred. And this was put out on June 8th. So when was that? Thursday? So look at the spike that occurred in the frenzy of buying call options on IWM. Much greater than anything that happened back over here in the 221 frenzy that was happening, and the peaks that occurred in the Russell 2000. So not only does my wave count tell me we could be at a turning point area, but when you see this kind of extreme activity, you got to sit back and wonder and say, okay, wait, what is going on? And combined with that, we've got something else that I picked up this week. Charlie Bolello put this out, and this I think was hitting the wire in several places about the sentiment readings here, especially after this rally in the S&P 500, and then of course what I was just talking about on the Russell 2000. This AAII sentiment poll, the bulls exceed bears by 20%, most since when? November 2021. That's when the NASDAQ peaked, okay? And then this other reading, AAIM, active manager exposure, 90% long, the highest since November of 21. So yeah, all of a sudden, everyone's in the pool. It's like, okay, we don't want to be left out, the FOMO kind of thing. We'll see. This is really interesting on the IWM, and here's what I'm looking at. Okay, so when you look at this trend line right here off these lows, we broke down below it, we pulled back one time, and now we've pulled back a second time. But also it's interesting that we've pulled back up into where we had some price action in here that should create some resistance, okay? And so we'll see whether or not this is going to follow through. This little pattern here, Wednesday, Thursday, it looks like a Harami cross to me. It's not a perfect Harami cross, but it's pretty doggone close. So when you see something like that, you see where we pull back on the trend line, you see where resistance is, the Elliott Wave count I've got in here. Let me get I don't know why it jumped like that. Here's what I'm looking at. I think we are about to begin minor 3 of intermediate wave 3 to the downside. We reverse back down in here. The key level is these June, October lows. We break through that 162, 163 level, and wow, the dam's going to break. It's just going to be, all heck's going to break loose. So it's going to be really, really interesting here on IWM. Now, I know that I've talked about the fact that I believe we're in a bear market, an ongoing bear market, but that doesn't mean that there aren't opportunities for stocks to go up. And of course, we know that. You've seen what's happened with several stocks and several of the tech stocks, et cetera. Some stocks are going to go up and some stocks are going to go down. Well, I've got two that I'm watching that look attractive to me, look like they want to go to the upside. One of them is Chevron. It's turned a little bit in here. It looks like it's trying to flip. This looks really interesting to me, especially if we break this trend line, and then especially if we get a close above this April high. So this is one that I think could really go. And of course, I'm watching oil, and we'll see whether oil is going to turn and keep pushing to the upside. It's been struggling over the last couple of weeks, but I'm thinking that it has a decent chance. We'll see. So this is interesting. And then the other one that is in the same industry, although it's oil services, which is Schlumberger. So SLB, it looks like it's trying to turn to the upside also. And if we break that trend line, I think it's going to go for a burst. And when you take a look at the weekly view, I mean, it looks like it's had these little rallies and pullbacks several times. So again, are we going to get a continuation of that? Are we going to break this trend line to the upside? That's what I'm looking at in here. So these two have really caught my eye also, but to the upside, at least for the moment anyway. Okay, that's it for tonight and for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll talk to you on the next video. It's going to be a volatile week too, because, well, we got CPI on Tuesday, PPI on Wednesday, and the Federal Reserve making their announcement on interest rates on Wednesday afternoon. Everyone have a great week.